documents carefully before investing.
Welcome back. Still tuned into Midcap Radar on CNBC-TV18. Well, the next stock on our radar is EPL. Delivered a good fourth quarter. Saw a recovery after some lull that we saw because of the supply side issues globally as well. Margins were also largely steady while revenues grew 10% on a YOY basis. What does the demand look like in FY24? What is the outlook generally on the business across geographies? We have Mr. Anand Kripalu, the MD and Global CEO of the company, joining us now to discuss the business specifics. Mr. Kripalu, good afternoon. Thank you so much for joining us here on CNBC TV18. A pleasure speaking with you today. That's what my first question is. After some concerns that we saw in last couple of quarters, there has been a recovery. Can you tell us what is demand and supply side looking like right now after whatever issues we saw globally? And is this something that you can improve on, or will this be the steady state?
Well, thank you for having me on this program today. The last couple of years have been, to put it very mildly, enormously challenging because the environment has been so volatile and so unpredictable that it's been hard to do business. First and foremost, I just want to say this, that EPL within packaging globally is actually one of the most profitable companies globally in terms of margin. And while we did have some challenges during this recent period, our drop in margin actually is amongst the lowest amongst packaging peers around the world. So I would say that, we are a kind of top performer, and we've relatively continued to perform extremely well through this period. As the environment has eased, our business has improved. And if you look at the last 4 quarters of last year, each quarter we've made a significant improvement in terms of our profitability. Right? And that really is a trajectory that says that we can get back to the levels that we used to enjoy earlier. So to answer your question specifically then, we see this quarter, Q4, and I'm pleased about our performance this quarter. We think it's a robust quarter in terms of top-line growth, margin improvement, and absolute EBITDA growing by more than 20%. We believe this is a sign of the improvement that this business is capable of delivering. So our objective remains to continue to drive top line by double digit and continue to drive margin steadily as we look ahead.
So do you mean to say you will be able to get back to that 20% margin that you saw in FY20 pre-COVID levels? Is that something which is achievable in this financial year?
I'm not going to get specific about deliverables in this financial year. All I want to say is that the road to recovery has started. We aim to have continuous margin improvement, and absolutely we'd like to get back to the numbers that we used to enjoy. Whether it will happen in 1 year or a little beyond that is not something that, I can actually commit today.
Mr. Kripalu, we are quite like those Indian parents when even if the child gets 98, we ask him, sir, why didn't you get 100? Because last year you got 100. So that's where the margin question comes from, because a couple of years back, you were enjoying margins of 20%. And though they've improved in Q4, it's still at 16%. But you are saying that they will eventually get back to that 20% band. So are you actively pursuing any acquisitions? Have you set aside any kitty? And any targets that you're specifically looking at that you would like to share?
Yeah, so actually in terms of growth, we're hungry for growth opportunities. We are setting up a new greenfield plant in Brazil because we felt there was an enormous market in the south of Latin America, and we've set up a large plant there, and actually commercial production has started as we speak. We're going to continue to invest in brownfield expansion to keep pace with the volume demands that we have. And to your specific question, we are absolutely hungry for M&A, right? We are open to M&A as long as the targets are strategic, are growth and margin accretive, and obviously come at the right price, all right? So we are hungry for all levers of growth.
Any amount that you've set aside, you must be scouting for those opportunities. Will it be an Indian company? Have you liked something abroad? If you can give us those specifics.
So there are no specifics as of now for me to really share, okay? But we're looking for targets across geographies, right? We've explored targets in the Western world very, very closely. right? And finally, we decided not to go ahead with it because the overall economics were not making sense. But what I would like to say is that we are absolutely hungry and constantly on the vigil for the right opportunities. And with the backing of Blackstone, who's a majority shareholder in this company, we will find the money if the right target comes our way.
The Brazil plant has begun commercial operations. What will be the volume contribution from Brazil this year, and any guidance on the overall volume growth?
So we don't give guidance on volume growth anyway, because a large part of our business strategy is premiumization. And premiumization comes from driving higher growth in sectors like beauty and cosmetics and pharma that tend to be margin accretive to our total business and value accretive to our total business. So we typically talk of revenue growth. I'm not in a position to tell you specific volumes about our Brazil plant, but suffice to say that in a very complex country like Brazil, we are going to be one of the only major global players in this space. And many of the both multinational customers as well as local customers are evincing huge interest. So I actually think, as far as Brazil is concerned, the best is yet to come.
Okay, the best is yet to come. What about sustainable tubes? Revenues there have grown by 2.5 times. How big is it as a part of overall revenues? How do you plan to scale it up? And is it a higher margin segment for you? Is that something which would be your vision for EPL after, say, places like Diageo and HUL?
So I must tell you, our vision in EPL is to be the most sustainable packaging company in the world, bar none. When I first joined this business, and I've been here just over 1.5 years now, I did a lot of calls with customers to understand, what's driving customers in this space, both global as well as local customers. And really, there are 3 things that are on their mind. The first thing is sustainability. They've all made big global commitments, external commitments on sustainability, and they want sustainable solutions. The second is, increasingly, people are dumping the carton, and the tube is really becoming the first moment of truth for consumers. So getting better printing, better design in your tubes has become a big priority. So design in printing, design in tubes and nozzles and delivery systems. And the third, of course, is cost. Recognize that when I was talking to them 1.5 years ago, we were in the midst of a huge cost and supply crisis, right? So these are the 3 big priorities that people want. Now, concomitant with our vision of being the most sustainable packaging company in the world, we are doing a lot of work to make sure that we, within quotes, lead the pack as far as sustainability is concerned.
So, Mr. Kripalu, is this...
you have to make... Sorry.
Yes, sorry. I just wanted to understand from an investor's perspective as well. Would it be a high margin segment for you since revenues you already have? Yes, please go ahead.
See, there's a strategic choice here. All companies need to move to sustainable tubes. Now, everybody is really struggling with cost. So you have 2 choices here. You can charge a premium, make more margin, and slow down the process of conversion to sustainable tubes. Or what you can say is, I'm willing to give you sustainable tubes at almost the same price, right? Give or take a little, but that will drive volume growth and share growth for our business. And, we have chosen the latter. I think in the larger purpose of making the world more sustainable, this is our little bit to help drive conversion quickly with the least barriers to conversion. And we are doing whatever we need to do in the back end in our plants to make sure that we equip ourselves to make that service possible.
Okay. All right, Mr. Kripalu, a pleasure speaking with you. Thank you so much for joining us. That's the word coming in from EPL. Outlook looking strong now, with more facilities also coming on stream.
Hungry for growth, right? Hungry for growth. That's the word from EPL, and they are targeting a double-digit revenue growth.
Double-digit revenue growth and trying to get back to those margins of 20% that were at the pre-COVID levels. We'll do one thing, slip into a short break. A lot of stocks which are buzzing around in the broader markets. We'll put spotlight on one of them.